I'm John Hanna for CityTV.net in New York, and we have Dirk Dijk, Chief Equity Strategist at Saks.com, joining us from Dayton, Ohio. Thanks for joining us.
Oh, always a pleasure to be here.
So, how are you this morning? Oh, this afternoon. Yeah, it's afternoon already.
Yeah, I'm doing okay. You know, some nice weather out here in Dayton for a change.
There you go.
So, nothing all bad.
Nothing all bad, except for the market, which has been down for a couple of days. Especially with that,
Yeah, well,
especially for that jobs number report. Tell us some more about it.
well, it was an ugly report. Just no two ways about it. The unemployment rate ticked up for the second month in a row to 9.1% from 9.0. Uh, and it was not for a good reason. And there is actually a possibility for a reason where the unemployment rate could go up when it would actually be sort of good news for the economy if it was just reflecting more people not being as discouraged and reentering the labor force. But that wasn't the case. The civilian participation rate has held steady as a rock at 64.2% since the beginning of the year, since January. And that's actually down from 64.9% a year ago. So while the unemployment rate has fallen to 9.1% from 9.6% last year, most of that is actually explainable by just fewer people being in the workforce. Now, there is a natural uh, downward pressure on the participation rate going forward, starting right now, simply from all the baby boomers starting to retire. But we've already been in sort of a secular downtrend in that pretty much since uh, the around April of the year 2000. Uh, so and that was not a natural thing due to the demographics. That just had to do with a really lackluster jobs picture, not just over the past year or so, but really over the past decade. Uh, and the percentage of people who are actually employed in the country was unchanged for the month at 58.4%, but that's actually down from a year ago when it was 58.7%. So despite the decline in the unemployment rate to 9.1% from 9.6% a year ago, uh, that's mostly an illusion. Uh, in terms of the other side of it, the employment report is really made up of two separate surveys. One of employers, and that uh, looks at the number of positions that are filled, and the other is the household survey, which is from where the unemployment rate comes from. The job creation numbers were similarly horrendous. Uh, we only created 54,000 new jobs in May. That's down from 232,000 jobs in April and 194,000 in March. Uh, and both April and March were revised pretty sharply downward. It's also a lot lower than we had in May of a year ago, when the economy actually added 458,000 new jobs. But the year ago figures are, treat them with an asterisk, because that was the biggest month that we had for the temporary census jobs. If you only look at the private sector jobs, we added 83,000 of them in May, down from 251,000 in April and 219,000 in March. And sort of to my point about uh, a year ago there were only 48,000 new private sector jobs created. That sort of illustrates that massive sort of asterisk that you have for the year ago total job creation thing. The other thing that you have to point out is that the private sector job numbers are in each of the last 3 months, and actually going back a lot further than that, uh, are a lot higher than the total numbers. In other words, it's been the government sector that has been one of the primary areas where the economy continues to lose jobs. And in May, we lost 28,000 or 29,000 total government jobs. That include most of those were at the local level. It was 28,000 at the local level, and over the last year, the local governments have laid off 267,000 people. That's 1.85% of the total number of people who were unemployed or employed at those jobs. That is a massive and significant job. Now, I grant you that local government jobs have to be supported by taxes. Uh, it's not that they're not doing useful things, but it is essentially taxpayer supported. So in that case, you can sort of downgrade the government jobs a little bit in terms of the overall significance to the economy. But those are still people who are working, and when you get to the checkout counter at Walmart, they don't ask, are you employed with the Board of Education or the police force, or do you have a job in the private sector? They just want to know if you have the cash or have a valid credit card to buy the stuff. So that money that is spent by uh, the people who are working for the government is money that flows through the economy and indirectly supports other jobs. Um, a couple of other sort of details that are a little bit worrisome is that we now have 2 months in a row where the number of temporary jobs has declined. I mean, the numbers aren't huge, just 1,200 in May, followed by 1,600 in April. But if you go back to what the previous pattern had been up until say March, we've been averaging about close to 30,000 temporary jobs being added each month. And I'm talking in this case regular, Kelly Services, Manpower Inc. type jobs. We're not talking the temporary census workers. Now, why am I so interested in temporary jobs? It's not like they're the highest paying or the best jobs in the world, but they are a good leading indicator of future employment trends. When a company is, in a recession, business is down, but then they start to see things pick up, they don't necessarily aren't convinced that it's going to last, right? And so it can be expensive to hire somebody permanently and then have to lay them off. So when you get the first inkling of things picking up, they tend to call Manpower or Kelly Services and get somebody in. And only when they become more confident that things are going to last do they bring people on for quote unquote permanent jobs. I don't think there necessarily is anything like a truly permanent job in today's economy, but at least what we tend to think of as full-time permanent jobs as opposed to something that's explicitly temporary. Now there are a bunch of potential special factors that may have contributed to this really dramatic slowdown in the pace of job creation. Most notably the supply chain disruptions from the Japanese disaster, and also the spike in oil prices. I think is taking a bit of a toll on people's disposable income. So those are two, potential, things that could make this just be a temporary situation. But I think they're at best a partial explanation for what's going on. The weather also, had the potential to cause some problems. All those tornadoes and bridges out from the flooding in the Mississippi could have slowed things down a little bit, but I certainly don't think that they, explain going from 232,000 new jobs down to only 54,000, or even on the private side going from 251 down to 83. It does seem that there's been a notable overall slowing in the economy over the last, couple of months. And we also got reports on last week for like the ISM manufacturing data, which was shockingly weak. I mean the overall index fell from 60.4 down to only 53.5, a 6.9 point drop. That's huge. And the index and this is a magic 50 index. So any reading over 50 means expansion. Anything below 50 means contraction. So the economy is still growing, but it's moved from growing at at least the manufacturing side, from a very robust rate, not quite high enough to say it's historic, but way at the upper end of the historical range, to a quite frankly very mediocre and anemic level of growth in just a month. And some of the sub-indexes, like the one for new orders, down to 51 from 61.7. The production index down from 54 from 63.8. Those are just radical slowdowns. Still positive, still moving forward. They haven't been thrown into reverse yet, but talk about slamming on the brakes. Which you saw in the May numbers from the purchasing managers index, and that's sort of consistent with a big slowdown in the rate of job growth. I think one of the key things behind it is simply the government policy. The QE2 is winding down on the monetary policy side. It was still going on, but we've got on the fiscal side this incredible obsession with having to balance the budget now, when you're at 9.1% unemployment, is frankly nuts. I mean, we eventually have to get it under control. But, this is a policy that would be fine if we were in an economy overheating and you were afraid of job shortages and inflation breaking out. That would be a great time to be doing these sort of cutting back on government spending dramatically, and talking about tightening up monetary policy. When we're at 9.1, no, we need to be running deficits. We need to be helping these people. We need to get the economy rolling again, because ultimately, with you get more people employed, that's going to create higher incomes and higher income taxes, as in tax revenues. So these cuts are not going to even be effective on their own terms about bringing down the budget deficit. They'll talk about, we're going to cut $1 trillion in spending. They might cut $1 trillion in spending. It's not going to bring down the deficit by $1 trillion. At most, it's going to bring it down by $500 billion. Because it's going to slow the economy, throw more people out of work, and certainly prevent people from getting hired. There'll be less demand in the economy. And, I just think that the entire terms of the debate, every question that's being asked on CNBC and Meet the Press about the economy is just a plain stupid question to be asking. It's all about cutting spending, cutting spending. Never anything about actually raising taxes on the affluent to bring down the deficit. Nothing about, hey, what are we going to do about this 9.1% unemployment rate? They'll bring it up as a talking point. But the actual policies that are under discussion are designed to make the situation worse. Or maybe not designed to be that way, but it's the obvious implication of what will happen if you implement these policies. 9.1% unemployment rate, and only 54,000 jobs created in a single month. I mean, we're still down relative to where the recession started. We're about 6.7 million jobs fewer throughout the economy than we were before we went into the Great Recession. At 54,000 jobs per month, that's going to take another decade to get back to the same number of jobs that we had in December 2007. The population's continuing to grow. You're talking about people just getting out of college that could go years without getting their first job. How is that going to set them up being well positioned for the rest of their lives? You're talking about people in their late 50s who really, now that they've been laid off and out of work for 18 months, they really have any hope of getting a good job again if things don't get ready, or are they just going to try and hold on by the skin of their teeth till they can reach 62 and take early Social Security benefits? This should be topic number one for what the government is going to do in terms of economic policy, and it just is not anywhere on the agenda. And I think it's just wrong and wrong-headed, and quite frankly, I think immoral. But then again, I can shout from the rafters about this, but nobody seems to be listening.
That's Dirk Dijk, Chief Equity Strategist at Zacks.com, joining us from Dayton, Ohio. And I'm John Hanna for CDTV.net in New York.